All right, good morning, everyone. All right, so we're going to jump right into things today. I actually have something I have to take care of this morning, so I'm going to probably broadcast till about 10 and then bounce. So we'll kind of go through things a little bit faster. We've obviously had movement with the non-farm payroll data coming in, and then again, non-farm data after non-farm tends to be like blah. So again, a lot of the movement is in, and again, kind of interesting in the fact that I think people are very confused about the number. So anyway, right now, if you're looking at 24-hour pip changes, you're seeing pound dollar up big. Again, the pound had some great data this morning, up 0.3. So again, huge spike there. You're seeing the euro pound down 35, obviously retracing a little bit now. Pound yen only up 35. And again, you're seeing that one tick back again. And that's all the yen coming in, right? That's all the yen power. You're seeing the dollar yen down 126 right now. Dollar Swiss 167. So again, trend across the board is obviously dollar weakness. Now, the Canadian data looks good. It's more or less flat because again, the dollar just will completely overtake anything going on with Canadian. Now, it was actually really good data for Canada. Their unemployment rate held; it didn't go up like they expected. Hired more jobs, but again, we're talking about the difference between 8,000 or 8,500 and 21,000 versus multiple thousands that we had for the U.S. Now, the U.S. data. Yeah, real interesting. Now, there was a slight adjustment last time. Now, is there a huge difference between 517 and 504? Not really. I mean, what are you talking? 13,000? And the forecast is supposed to be 193. So the reality was it was supposed to be 193,000 is what they expected, and it came in at 5. That up there. Let's see. There. Now you should be able to hear me. I think you can hear me now. Yep, no sound. Okay. Nope, the sound wasn't cutting off. There was no sound. NVIDIA updated, and which the sad thing is, I just gave you 5 minutes of the best examples I could give ever. So you guys just missed out on everything. Session over. Done. All right, I'm gonna say it again really, really fast. I started off by telling you guys I do have something I take care of this morning, so I'm only gonna broadcast till 10. I just wasted 5 minutes of it not actually talking to you, talking to myself. Yeah. Yeah, they were. Yep, seemed that we're a joke about an hour later. Yeah, see, I told you. Yeah, but anyway, let me go through this really, really fast. Okay. Talked about the pip changes, right? Again, weak dollar across the board, strong pound, as justified. They did better than expected. The US based data today, man, I can't believe this. It was such a good, the last 5 minutes have been so good, but I can't say it all over again. I don't have time. Anyway, people are looking at this as dollar weakness. You're seeing monstrous movements. You're seeing yen strength coming back on the board. So what I was looking at, why I was clicking this around, there was an adjustment last time to 504. Is 504 to 517 a big difference? No, but people see the red color and they think bad. The reality is this was supposed to be 504. Is the forecast of 193, is 504 substantially higher? Absolutely, still a huge number. And this time we're still hiring back. People are getting paid less, unemployment is going up. What this means is they're laying people off, hiring them back more than expected at a cheaper rate. Okay. So again, what this shows is the job market is still hot. It's just companies are dumping high paid employees and hiring back at lower rates because people are afraid of what's going to happen in the economy. Okay. How do we know that? Again, you click over here, they talk about where they're coming from. Gains in leisure and hospitality, retail trade, government and healthcare. Yet employment decline in IT, basically in information technology, and in transportation and warehousing. Comment right here is great. This is complex data not tradable for today, right? Right? Earnings, once again, lower than forecasted, and unemployment is rising. Trouble's on the way. So again, everybody kind of has the right comments, but the way that the market is looking at this, they see red. The Fed's not going to do anything. Okay. We know that this data right here, again, this is not a real number. I just mentioned, again, I had a great conversation just a few minutes ago that you guys couldn't hear. Unemployment rate is not a real number. It's not an important number. It's made up purely for propaganda reasons. Okay. It is not a real number. Okay. It doesn't include everybody. It doesn't include people that are out, that people that aren't looking. It is a fake number. Okay. It's great. It's awesome for the media because they can talk about, oh my God, unemployment rate's going up. Yeah, but we're hiring people way back faster. It's just that this is what's happening. Laying people off to hire them back at a lower rate. Okay. It's businesses being smart. That's all that this is. Okay. But the fact that that people are getting hired back at a faster than expected rate also goes back to what the JOLTS data told us that, hey, listen, we have way too many job openings. Look, we had an increase in JOLTS, went up by 500,000 more than what the expectation was. And we're still hiring more people than expected, which shows you the labor market is still going crazy. Okay. Now they're paying people less, but we know inflation is still too high. So while on face value, people are going to look at this and say, hey, red, 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 woo, Fed's not doing anything. Not really the case. Okay. Not really the case, but it's just more, it's more of a bad recipe. Okay. Now, in the next 2 days, obviously nothing Saturday, nothing Sunday, and then really nothing Monday morning, and Tuesday is when the CPI number comes in. This is the next big ingredient. And they're going to look at this and be like, yeah, look, the Fed doesn't have to do anything. That's awesome. But like the core isn't changing, right? The core is supposed to be dropping, right? It's not. The overall is, and again, we know what this has. It has goods and services in there. I'm sorry, purchase, right? Yeah, the core is, I'm sorry, that's everything. The core number is the one with food and energy excluded. If that's not changing, that shows that there's been no effect whatsoever. So again, hot JOLTS data, more people are getting hired than expected, even though that JOLTS data is going higher, right? And then we see inflation not doing anything at all. That's a recipe that we may go to a 0.5. Okay. So, yeah, the market's been when I say the market, I don't mean like the bond market. I mean the stock market. So let's dive into things again. This is what you're seeing. Again, it's funny. Yesterday, we talked about how this is kind of setting up for a Harry Potter trade. We wanted to see basing. If we continue to cross, you can see this. Look at this. Base, 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 gap down. There's your triangle. There's your entry. And boom, right back down to the origin of the original move. So it's kind of funny how that worked out. The VIX, again, VIX took off. Oh, God, oh, God, oh, God. It's going to be bad. It's going to be bad. It's going to be bad. And then it popped down. Now, when you're looking at the indices, you may say, wait a second, the dollar's down. What is this? The dollar's down, right? It's great. That was bad. That news is awesome. Is it? I mean, all the indices, right? Straight down at 930. Straight down at 930. How could this be? Well, it's pretty simple, right? The market is not dumb. The average retail trader is, yes. They sent the dollar back down because, yeah, the Fed's going to stop. But the reality is it's not, right? You may say that, hey, listen, this is, bad is good for the economy, but eventually bad is bad. And it's funny, CNBC actually talked about this yesterday, where we may start seeing bad is bad again and good is good. If you look at this on face value, you're like, yeah, this is bad. You know what's bad about this? They're firing people. This is showing that inflation is going to continue to hold. And this means people are getting paid less money. But what are they doing? They're still spending that money. You know, on what? Leisure and retail. So again, bad recipe. All right. So that's what you're saying. Commodities for the most part, minus natural gas, everything is up here. I mean, again, with the dollar being slammed to the downside, you would expect gold to be doing the same exact thing. We had that gold trade that kicked in yesterday. As far as the currencies, and like I said, I'm going to kind of blow through these. We had already started to kind of pull away on this one. So the Europeans kind of telegraphed it a little bit. I like where we are right now. I'm actually good with this one. I do think the dollar strength will come back in next week, particularly with CPI coming in. Right now on your watch list for the weekend, we're sitting in the middle. I doubt we can kind of pull all the way back down. I mean, for this to get into a trade, it needs to move 61 pips to break the level, go lower, come back up, and continue to push down. That's a 105 pip move with a retrace. I don't think we're getting that on a Friday. That's a lot of movement. But I do expect it to come back down. What I'm hoping for is that we just kind of hold and maintain. We don't break through this zone. I'd like to use this zone and this breakthrough 65.52 for a Sunday night base trade. Aussie yen. Again, this is the yen. Why? Because again, the overall, the movement inside of the indices are looking at this. Now, it did push back down, and you can see it was kind of at a 23.6. You can kind of see there's a pullback there. At 6 o'clock, it hit it, it pulled down, and it kind of gave us that confirmation. This is a trade that you could have taken from here. Again, here's that old zone we were talking about. Once you see a base and a push, and like, hey, wait, there's a confirmation there. You can see this one kind of got in a little bit ahead of time, and all it did was it rallied right back down again. So right now, unfortunately, the trade is done. This one has the ability to run all the way back down. There's not much more else we can do with it. So again, this one actually turned out to be, we thought that the Aussie, Euro, and Pound Dollar were going to be better. This one actually turned out to be the best trade as far as setups go. And again, pretty nice runner. From that zone, it went very, very fast. 90 pips, right? 90 pips in less than an hour. So again, great trade setup. And all it was, and again, the way you would have traded this one is just keep tracking it down, keep tracking it down. And once you put it here, you're like, oh, look at that. We got some confirmation and we pulled up and then got a fail. It's like, wait a second, we got a failure to go lower here. That's where you end up throwing these short trades on for news. And that's how you trade them, right? It's 15 pips worth of risk. You're looking for 45 in the other direction. 45 sitting right there. That's nothing. You would expect it to drop all the way back down. And right now it's sitting at a 1 to 6. So again, big runner in that one. Okay. So we'll take that one off. Euro dollar. This chop here in the overnight kind of led me to believe, I was like, wait a second, look at this. The Europeans had absolutely zero clue what to do with this when you had a this and this. Like you had some consolidation in, okay? We did not get the big push. We were hoping for the European push down to give us a big spike. We didn't. They were totally confused. There was no kind of front run on there. And immediately, what did we do? We pushed back up into some of these upper levels. And I think this one got broken. Yeah, just by a little tiny bit, it got broken. We weren't really looking for a short on this one to 106.97. It's starting to pull back as it should. Again, it's a parabolic move to the top side. We're at 10 o'clock. It should turn and reverse back to the downside. So, again, nice move, but I like the Aussie yen much better. This was not giving me any signs of which direction to go in. And again, with the consolidation, and we knew it was going to move. It just gave no direction of where it was going to go. Now, Euro pound. Obviously, this one took off in the morning. And again, let me adjust this so it's actually correct. There we go. This is one I did on my phone. And again, we're looking for it on this side. So here's the Harry Potter from yesterday. Well, here's where the profit target was. And again, if I continue the profit target across, I know that's not straight. Let me copy and paste it. There you go. We had some basing before that level. We see basing. We like that. We see riding on the top of a base. We like that too. Well, there's your Harry Potter play right there. Price went down. It based. It came back up. It entered the Harry Potter, and boom, we were out this morning. And again, Harry Potters are not necessarily news-based, but again, it was just another one of those easy setups if you're awake that you could have taken. Now we're sitting on the opposite end of the spectrum, and you're seeing we hit it, we kind of base, we're hitting, we're chopping back and forth. Right now, all eyes are going to be focused on the U.S. and the dollar, so Euro pound is not really kind of the best thing to be trading right now, okay? It is what it is. It's where it is right now. If it just it wants to break through this 50% level, it will hit something down here at the 61.8 and maybe go down to the 78.6, but most likely it's going to run out of steam because the European market only has an hour and a half left to go. Okay. Euro yen, big move. Why did it move big? Well, we knew it. This one, they actually sent it up at 5.30. Now, again, not as clean on this one. We could run fibs, but this was not as good as the Aussie. You can see it wasn't really to 78. It sliced through the 61, came back down, sliced up again. So not really a great zone on this one. I'd see where we are right now. We do have a Harry Potter trade set up right below us at 141. I'm sorry, 143.57. if we can base in there and if we don't retrace at 1030, now this is a parabolic move. It did move very, very quick from the time news came out. It's 109 pips. It has a daily ATR of 120, so it absolutely can do that. But if it comes down and bases in here, and I'm sorry, if it bases, that's where we were looking for it to break. I'm kind of rooting for this one to kind of hit and then start to retrace back again. I'd like it to hold this one for next week. I don't know if it's going to. I'm afraid we're going to see a little pullback and then a continued push to the downside today because I think people are going to take it extremely negative. So it's there. I'm okay with it. I understand the move. If anything, I kind of want it to do this. But if it comes and starts basing, we're really looking to pull the trigger on this one for a 40 pip gainer. And again, we set this one up yesterday. So pound dollar. So pound dollar, look at this. It came through and it just chopped. The Europeans had no idea what to do with it. We knew we had pound strength coming in from the data, which absolutely was 100% justified. And it kind of went through, kind of didn't really give us any type of pullback or anything. And it ended up just going higher. So, I mean, we can take a lot of these near-term, short-term stuff off. You can see the drama that it had there. And it did go up. It's sitting right here. And this is a confirmed level from right there. So, if anything, I would say the pound dollar right now, it's kind of at a reversal level. I mean, if you're not anything right now, I don't think this is the worst trade in the world. The risk on it is, it's not bad. It's about 16 pips. It only needs to move back down. 1 to 3 is sitting right there, right? It's not even retracing it back to the pre-news move. I think this one is decent. The big question is, can we get a confirmation entry on this one, or is it just going to leave us and go back to the downside right now? So the reason I like it, again, the 786 doesn't mean anything to me, but I know people like that one. It is a base. It is a confirmed trade. It did get front run before. It is a parabolic move up, and that's where we tend to see reversals, as well as it's almost 10 o'clock. So I like all those things, but I kind of want to see a confirmation come out the top side of this one. And like I said, a 16 for 50, it's not bad. It can absolutely move that. It's got a 118 daily ATR. European market ends in a little bit, but if we get any type of retracement that, if we have one person from the Fed talk about how this doesn't change anything, I think that could drive this back down to those 45 pips or what we need. Okay. And again, it doesn't even need to go all the way back down again. It just needs to go a little bit. And actually, if we run fibs, it's probably at a 23. Yeah, it's sitting. Look, the 23 where everybody's looking to get in happens to be at that old 61. So it kind of makes sense. We just need the confirmation that it's time to reverse. Okay. Pound yen. So we got close on this one. So we knew that we had the European, the pound data, the UK data right here. It kind of Harry Pottered and then took off, again, we were looking for a reversal. So we were kind of looking for a short again. Again, I think this one, because we had such strong data, and then obviously we were looking for a retracement. This was a harder one to play today. Strong pound, strong yen. Not really the best of trade setups, right? There was other things out there to take advantage of. And all it's done is retrace back down again. So we had a couple on there. Again, we talked about 164 being the area that we wanted. There's your zone at 164. If you cross the 164 across, you can see that that's what we did tag there. Whether or not you traded that or not, again, there was other things out there that were better opportunities. But once we started slicing through, you had to kind of put something on that one. So, yeah. And again, the 50, 1, 2, 3, this is hit number 4. So we really didn't. That's why we put no numbers on it. We mentioned that we like this one better. So, we were kind of hoping that it would have hit it on the pound spike, not the yen spike. It did hit on the yen spike, turn and rolled, and it's obviously way out at this point. Okay. Dollar CAD. So dollar CAD. We had pushed up at that level, and you can see the Europeans actually did send this one down and then continue to push it back down again. We were really hoping to be down here. And again, what did we say? If it went down, we were looking for long. It didn't. It went up. So we were looking for more of the short, and it did. It moved. Right now, again, keep this one on your radar. I'm actually going to throw at this point, I'm going to throw a Harry Potter trade on there. I'm going to put it down here and set this as an alert. I like where it is. It made it through non-farm payroll. So again, if we continue to see dollar weakness, if people really think that this is it, if it comes down and bases, we should be able to pull the trigger on this one and run this one all the way down. Now, will it happen today? Potentially, but I think it's probably more of a next week's based trade. Maybe like a Monday night. This could be a Monday night based trade, sitting in that level right there. But a break of 137. I'm sorry, 137.17 down to 136.60. Okay. Dollar Swiss. There was no fool in the dollar Swiss. So here's the trade yesterday. We talked about getting out. We're like, hey, listen, we just got out. There's no trade set up. You can see, look, we had that marked in the yellow. And what did it do? It bounced off of it and then said, boom, right through. Now, I am kind of surprised. It did actually chop through this down here. You can see that it ended up kind of basing a little bit, hit it at 7 o'clock and bounced again. And then all of a sudden the news came in. I wouldn't have felt comfortable with this one. Again, it was a 61 level. It was okay. But once it took a bounce at 7 o'clock, 7:30, I didn't feel as good about taking this one for a long, right? As soon as it started to come up and kind of found that area, I was like, yeah, this is more of a short trade. So we can take a lot of these off. We can take that off. We can take this off. This area got blown up, so we're going to remove it. Again, based and pulled back. There's that target. Let's run some fibs from top to bottom and track this one down. You can see right now, if this is the bottom and we're truly there, there is a bit of a level with a confirmation right here above the 50 before the 61.8, so kind of hiding there. Let's take these off and clean them for next week. Take that off. These two are out from yesterday. Pull that across. 78 is out, so I don't need this anymore. But we do know we have a level sitting right there. There we go. Right there. All right. So that's what we're looking for right now with dollar Swiss. So if this is the bottom and we just start to rally back up again, parabolic move, I think we can have some selling coming in right there. And I'm okay with that selling, but probably next week more than anything else. It would require 133 pips up. It's got a 70 pip ATR. So that would be a ton of movement down. Double the ATR back up again to get a trade this week. Not going to happen. Dollar yen. Again, here's that yen strength. Right now, the supposed dollar weakness and yen strength coming in the market. I told you 35 was a target. You can see in the overnight, we did push up. Started the wait, and then the news came in here. So the news was already coming in. The market's mind was kind of already made up what was going to happen. And funny enough, look at this. Funny enough, the dollar down big, right? Down big, but also Bitcoin down big, Ethereum down big. So it's funny. The market is kind of giving you signs, and then TLT, TLT up a little bit because of the dollar right now, right? And people are looking at that, be like, yeah, this is not the best thing in the world, right? Bad is actually bad. So yeah, so again, not surprised. 35 was the target. We talked about if it's chopping around, look for some entries in there. And let's see, did it? It may have done it. It kind of did, right? It kind of did. It actually went higher than the previous peak. It's between the 50 and 61s. I mean, I guess you could have taken it, but not a super clean level, but not necessarily surprised at all with the way the data reads, as well as the pre-market action, why this tanked and pushed to the downside. So, it finds a bottom in here somewhere. You see right now we are below the 135. Unfortunately, with this clearing wick, there's not a lot down to here, but look at this. We've had a couple hits of that area already, and it's not super clean. There's another one down here at 133. Can we go another 100 pips today? Maybe, but that would be, let's see, how much of a move would that be from news? That would be 353 pips. So that would be over double. That would be 2.5 times the daily ATR. It's a little extreme. I don't know if it's quite that crazy. Yeah, a little bit extreme. So, but yeah, we probably find a base in here and retrace back a little bit. I think it probably finds some stability around this 135 mark. So, it's in the right spot. But again, you see dollar collapsing, you would expect the cryptos to be doing the same, and they're not. So, they're typically the counterplay right now, and they're getting slaughtered as well. So, yeah, it just shows you that, again, the numbers, there's more to them right now. As far as commodities go, crude. So yesterday with crude, we talked about that target. You can see at 9:30, we did tag that one level here. You can see the 23 didn't do anything, didn't slow them down, didn't make it to the 50. The supply zone came in, and we got off when it was right here, starting at 10 o'clock. You can see it pushed back down. I called the target of 76. We ended up hitting it, and we based in it, and then we just pushed and kind of grabbed it again. So overall today, I would say that where we're at right now is actually not a bad place. Unemployment going higher, you would assume would actually play more into oil as being a demand kind of destruction tool, but they're hiring people back, so it kind of washes its way out. So again, crude oil is going to probably end up a little bit early today. Not great. Natural gas, no reaction, right? No reaction. Like I said, I think natural gas for the week is pretty much done. 1.8% is nothing. It's more or less sideways. Again, it should be ticking back down again. I mentioned yesterday I expected to go between the 240, 250 mark. We're at the 249 mark right now. I don't necessarily see anything really kind of being a major driver for natural gas, so it's more of a next week thing. Gold, absolutely taken off. Again, we had we had this trade yesterday. The reversal hit right at 10 o'clock, was out at 1 o'clock, 12 o'clock in the afternoon. We mentioned that being a 50 and taking that level. So if you caught that one, great. It hit it again, 1, 2, and 3. 4 started the chop. You're like, this level is going to get smoked. And again, weak dollar, strong. Now, we did actually just push above this 185. So right now, and again, this is kind of it actually did go a little bit higher, but we know right now we have a little bit more room to run up until at least this mark up here at 186.67. So it's more, I guess, there. It's up there. I actually really like this. The reason why I like this going higher is because I'd love for it to stay up here and end the week. Because next week, when one of the Fed presidents says, "Yeah, I think we're still going 0.5," we're hiring people back way faster, and yeah, the unemployment rate goes up. But remember, what did the Fed say they needed to get this to before this was going to be done? 4.6, right? They said they do not see inflation disappearing until 4.6. This is 3.6. We got a lot of room to go before inflation is under control, and they're hiring people back faster than expected. Okay, so again, I'd like this. Keep going. Get up to 1870, and then we short it going into Sunday night. Okay. Silver, same thing, right? Silver, again, a couple touches of this 23. I wouldn't expect that 23 to hold on that one, particularly because this one went all the way through to there. There's barely anybody left. So with it pushing right now, this is a funny spot because I don't really have anything sell-wise in here that I'd be interested. But again, the 50 is sitting right here. And you know how people love that 50% retracement tool. And on top of that, people absolutely love the 6218. So we're at both those levels. Obviously, a parabolic move up. This is where they're looking to turn and rotate. And again, you come get profit in that silver trade. These are two big levels people are going to do it. Now, the silver market does close earlier today. Or not today, just in general, but it does close earlier than the overall markets. I wouldn't be surprised if these start turning and start pulling back again to get that profit taking. Because, again, you got to lock that profit in. But as you can see, the surge was unable to get past 21. So I think 20, probably 20 is coming back in. And again, the feeling's the same. Gold and silver exactly the same. Rally, 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 rally. Get us the good spots. Heck, if this can get to 21, these are both great places, right? These are both great places to be able to, get shorts for the week of next week. Now, opening print today, I'm not going to focus too much on there. Again, the VIX is going crazy. Look at this. Indices in the green, but yet the VIX is going higher. Getting a little bit delayed. Dollar continuing to deteriorate. What the heck is going on, right? Again, yes, it's above where it was yesterday, but since the market opened here at this candle, it is below. Again, it kind of bounced off the year. So again, there is a little bit of a gap play in this one. Overall today, though, I really don't think, again, depending on how you look at this, is bad good, is good bad? Again, non-farm is not an opening print-based morning. And again, am I surprised at all that this tanked at the open? Absolutely not. Everybody that saw those red numbers was like, yep, we're going long. It's going to be a big green day today. Immediately stopped out, right? Immediately stopped out. And again, it did fill a technical gap. So on a technical spectrum, you should be long this right now. I just don't believe the Fed's going to slow down. And when you see this one, you're like, unemployment's going up. People are getting paid less. Holy crap. This is bad. These are bad recipes, which they are. NQ looks exactly the same. Came back, filled that gap in the overnight. Again, highly technical position right there. Opening print, nothing, right? Didn't come to the top or bottom, but we did bounce. And now it's trying to rally back again. YM, same thing. Is it really doing much? No, but it came back. There's your gap. Filled the gap. Didn't hit it on this one and actually filled it early at 1:30 in the morning. And then Russell, you may say, what the heck's going on with the Russell? Well, 1800 is what's happening. It loves 1800. Now, funny enough, it did kind of have this little Harry Potter trade where it came down and retested. You can see 8:30 came up and 9 o'clock went right to the downside. So the writing's on the wall. The Russell's actually reacting to it. Down 1.5%. We'll see if it can rally back up. But 1800 is going to be a big psychological level. People will talk about that 1800 number. So here's what it is, right? Like I said, overall today, my opinion on the markets, I think they all deserve to be read today. I think that, again, this is bad data, sure. This is what the Fed, is my opinion, is looking at. The Fed says this has another whole percentage point to go. Seeing the predictions right now for CPI, core not changing at all, and then seeing more people getting higher than they expected, I still think they got to keep their foot on the gas. I don't think there's any slowing down at this point, and seeing people get paid less, earnings lower. Lower earnings, more people laid off, although even more people are hiring. It's a cycle into paying people less, and inflation is not changing, which means long term it's going to hurt people's wallets even more. So, all right, with that said, at 10:05, I do need to get running on this one, so let's go ahead and do our drawing real quick today. Again, I apologize for having it be fast on a Friday. Non-farm is out, so there's not as much to do today, unfortunately, and that's typically what we're into. But I do have something I have to take care of early this morning that I have to get to that I can't push off. So With that, let's see. Everybody's in. Let's go ahead and do the drawing. Neuro, good seeing you back. You take this break, and I'm like, where the heck's Neuro, right? Looks like Ernest is sleeping today. So, all right. The euro yen trade, or the alert just went off, by the way. Winner of today's drawing is Mitch. Is that two in a row? Mitch won today, right? Look at that. I didn't mark it as complete yesterday. So, Mitch, you just won two in a row. Wow. Has Ernest rechanged his name to Mitch? Wow. You were 28 yesterday. Let's see. Let's see here. Now you get 100 pip chips today because it's the second win in a row. Bam, look at that, Mitch. You're right there. You are right there. This is you know what, Mitch must be the Ernest, his like his phone or something, right? It's got to be what it is, right? Got to be what it is. His hacks are in. Oh, look, there you go. There you go, Mitch. Number 24. You have made it to a seat at the table, right? Like the program says, a seat at the table. You're on page 1. So awesome. All right. So with that, I'm out of here. I got to get running. Thank you guys for joining me today. Again, I apologize for the shortened session. But again, hopefully you guys did some stuff on got some money out of non-farm payroll today. I love where prices are. I wish they would all just stop right now. I would love it if the market opened for a Sunday night right now because there's a lot of things that we could have reverse. And again, I'm looking for a Fed president to talk. So with that, I'm out of here. Thank you guys so much. I'll talk to you later. You guys have a good one and have an awesome weekend. Be safe, and I'll see you Monday.